Hello and a warm welcome to today's cryptocurrencies update for Friday, December the 2nd, not 22nd, the 2nd. Let's go straight to the charts and see if we can find something significant or not, because price hasn't done much over recent days. Starting off with Cardano, we're just going to go through the list. It still looks better here for this B wave. I'm still looking for this gray wave B. Don't look at the technical indicators for now. At the price, it's going to last probably to here, somewhere in December, I would say, and then we're still going to look for this last C wave lower. And timing is not, of course, my forte, but something like this. So we have here wave A. Let's assume wave B will be about the same length as wave A in time, and then we're looking somewhere in, again, early to mid-December. For this wave B, I said in the 35 cents to 37.5 cents region, and then the final wave C. That remains my preferred path, and I see no reason to change my tune. So far, so good. Let's see if we can get there. Of course, the low here in November needs to hold. If not, then we are subdividing lower. For now, again, I prefer to look higher. Avalanche, same deal as well, seems to be a reasonably similar pattern as that for Cardano. Should ideally be in this wave 4 to about, I would say, anywhere between $15 to $17.50. So make that around $16, as you can see. And then we should see our final wave 5 lower to about $10. Again, the warning signs for the bears are on the charts. If we start breaking above those levels subsequently, then of course the low is already in place as a little bit more unorthodox low. But remember, we're dealing with ending diagonals, which are harder to forecast due to their overlap. It's not a clean, clear impulse as, for example, this wave lower from April into June. That is easier to count. Not much overlap, as you can see here, the ones and the twos and the threes and the fours kind of all line up nicely. But then you see here, this decline is overlapping, diagonal. Binance coin is still stuck between a rock and a hard place. Done two things over the last week, Jack, and you know what. So we're still stuck with the bullish alternative. And that is, I guess, the weakness of Elliott Wave, but in this at the same time also the strength of Elliott Wave, because we have if-then scenarios. It's very binary. If we go higher, we get the 3, 4, and 5 preferred path. If we go lower, we have the ending diagonal path. So we are ready. This is nothing different than a general drawing its battle plans. You have your primary battle plan, and then you always have a contingency plan. We are dealing with probabilities. Nothing in life is certain. Everything is a probability. You wake up today, but you might not make it till tomorrow. You don't know. You hope not. Most likely you will make it to tomorrow, but there is a chance that you won't. So you have to always know that that is a possibility. Now, you don't have to always prepare for such a very fatal outcomes, but there are no certainties. Just because it's Friday and on Fridays you always do this and you always do that doesn't mean it will actually happen. So there are always deviations to the plan, so to say, and you need to be prepared for those. That is all we do. So my primary expectation is that we can get the bull, and the alternative expectation is that we will get the bear. That is, and you can turn it around as well, because we're pretty much stuck here between a rock and a hard place. So it's 50-50. So I can't really give you a high probability to the recent price action. We really need to wait and see. That is pretty much the bottom line on this one. So there are other ones that are easier to assess. This one is currently not easy to assess. So we have still our bearish warning signs for the bears. We start breaking higher subsequently, above the 1, then above the recent highs, etc. Then we are going to track this primary path. If we break lower, we're going to track this primary path. So that is really all there is to it. And of course, already a break above the trend line here would start to signal that we are in a bullish resolution and not a bearish. And just because one crypto is rallying, it doesn't mean all the other cryptos have to rally. Okay, that is not how we assess charts. We look at each and every chart separately and individually because each need to be assessed in its own right. So I'm just moving here some of the labels of the price charts because stock charts is again making my life more complicated than it should be. But again, that is pretty much where we are for a Binance coin. So just sit and wait on our hands and we'll let it eventually decide. Same for Bitcoin. Bitcoin hasn't done anything since yesterday. So not until we see a break above 18,185 will I prefer this wave count here. The 3, the 4, the 5. Now note this green wave 4 can become more complex. The current rally ABC could just be wave A of 4, and we're going to do an A lower again for wave B of 4, and then we're going to do a C wave again for wave 4. So this is the initial wave count, and I don't know yet if it's correct. Wave 4s can easily subdivide, so please take that into account. And of course, a break below 15,500 will be a very good sign that this wave 5 of 3 is underway, with, of course, the notation that if this wave 4 is subdividing and turning into a flat, the B wave might become irregular. What we then will see is a step lower and a quick reversal. So that means there are whipsaws always possible. Just keep an open mind. For now, still not trending higher. We need to get above the 50 and the 200-day moving average to start a increased probability of good things happening better. That brings me to Ethereum. Hasn't done much since yesterday either, or actually since the last 3 days. Still looks better for a 4. I'm still looking for a 5 to complete gray wave 3, then a gray wave 4, gray wave 5 for this potential wave 1 of the November 22nd low. So far this still looks reasonably okay. Below 12,000 of a 1220 from current levels starts to suggest that all we got was this wave 4, and we still will revisit the 965 plus or minus 35 level ideally for this wave count. So also this one is not out of the woods yet. We need to really start breaking higher, get back above the 50-day moving average. I would say about 1375-ish would be great, and then eventually start breaking above the 200-day moving average. So we'll have to give it a little bit of pause, still early days. Again, the impulse path is still not invalidated, so that is my primary expectation. Why? Because we did get 5 up, we got 3 down, and it still looks good for an impulse hitting the ideal impulse target zones for 3rd, 4th, and 5th waves. So that remains my primary expectation. That's my primary battle plan. And if one is then long, you know, okay, below 1220 really increases the odds that we're going to go to 900. Maybe you don't want to be part of that. Then you know where to place a stop level. That's how you use Elliott Wave for trading. Very clear cut. Can it reverse back again? Of course it can. There are no guarantees, but that is then becoming the primary plan. Below that level, increases the odds that we are indeed going to go to the 900s. Maybe you say, I don't want to be part of it. So then you will not be part in that decline and are stopped out, hopefully for a little bit of profit, if not for a tiny loss, because to 900s might be a much bigger loss, and that's wasted money that maybe can be put into another crypto that is rallying. Don't get married to only one crypto. There are thousands out there. I can only cover a handful, and that's because I'm just only human and have not the bandwidth to do every single cryptocurrency. No need for it either. So that's still the path that we're looking at. Moving on to Link, and Link is still struggling in its cloud. Here you can see the cloud. It's moving higher. We're above the 50-day and the 200-day moving average, but we do need to get above the cloud, and we do need to get above $1.08 or $8.10, and then eventually above $9.50. That would be fantastic. Then I think we have a very good opportunity for a much bigger bull run. But first thing first, and that is, dear Link, you need to clear that Ichimoku cloud. This is the red arrow. You can see how important it is, how much it's struggling with it right now. It's a thin Ichimoku cloud, but struggling with it. So we need to get above it, because if we do, then we're above the cloud, above the 50-day and above the 200-day. What I now also want to see is the 50-day needs to get above the 200-day. That is also a bullish setup. A bearish setup is when, of course, price is below the 50-day and the 200-day, right? So you have this very bearishly stacked chart. 200 days on top, the Ichimoku cloud is below it, the 50 days below that, price is below that. This is 100% bearish. And then slowly but steadily, as you can see, it takes a long time. Stupid stock charts always keeps moving these price labels for nothing. Sorry, so much extra work, as if I have nothing else to do. Anyway, so that's the setup. And here you can see over this whole summer how slowly the chart is kind of bottoming out. But close is no cigar, and bottoming out doesn't mean we have a full new bull market in place. We have to be patient. Patient gets paid, and now we have already a little bit better setup. But again, as early November shows, no guarantee. You can get hammered all the way down. That's why we have stops in place, right? Always have a stop in place, no guarantees. We can go to 1 million. You wake up the next day, it might be at 0. Who knows? Anything can happen. So here is then Matic, a few charts on Matic. We have the bearish 1-2-1-2 setup in place. We are in the ideal wave 2 target zone. So it can still crash all the way down into the 0.1 cents level for a 3-4, 3-4-5 as shown. This potential is still not taken off the charts. It will require a break below the November lows. That is the cutoff. So if one is long Matic, then you know what the cutoff is. Below that, and you can stand to lose 90% of your crypto value. So please take that into consideration. We're not messing around here. We're making sure that we are protecting our hard-earned money and treat it accordingly. Don't be sloppy about it, because it will take a long time to recoup any losses. That said, the bullish alternative is shown here. We got the breakout above this declining downtrend, and well, that's I guess a declining downtrend. It is a downtrend. I mean, the declining downtrend line here, this one, the upper one. And if we then zoom in, looking here for potential 5 waves higher, 1, 2, 3, 4, and potentially 5. Just yet, we do need to break out higher. And again, I want to point out these dotted lines, which are the Bollinger Bands. When the Bollinger Bands get tight, it often means we are starting to look for a reasonably large move, be it upside or downside. Here we had the tight Bollinger Band going into late October, and eventually we got a nice bullish resolution, as you can see. We also then got a bearish resolution, but that's when we start taking profits, raise stops. Yes, everybody's nodding yes, yes. And then we don't care about the decline, because we are at some point only riding on house money, right? There is still no fully confirmed bull market whatsoever on any of these. We're still very early stages at the best. So I really want to see, of course, Matic get above its Ichimoku cloud. It's still below it. Yes, we are above the moving averages. Great. We have 4 out of 5 green, I would say. We're above the 200-day, the 50-day, the 10-day, the 20-day, but still below the cloud. So still not yet good times ahead. So that is the zoomed in version 1, 2, 3, 4, potentially 5. That'd be great, because after 5 waves up, I'm starting to look for, at the minimum, 3 waves lower and another 5 moves higher. The first warning again for the bears is about 97 cents. If we get above it, then we have a higher high, etc., etc. These warnings are on the chart for you to take care of in case you, or use, I would say, in case you're short and all that stuff. Same way, of course, on the long side, break below the November lows, that opens this path. All right, it's not a certainty that this path will happen, but it opens this potential. That's what we're looking for. Last but not least, Solana, well, hasn't done too much, of course, over the last 1, 2, 3, 4, 5 trading days. So I still prefer to be in a fourth wave. Fourth waves, again, are highly unpredictable. But let's see what we get. A zigzag would be nice. We had kind of like an irregular flat for a wave 2. which took about 1 month, 2 months. So wave 4 should be a little bit faster, a little bit cleaner and clearer if the rule of alternation continues, and then a final wave 5. So as you can see, some of these cryptocurrencies are definitely in different stages and different wave counts than others. And for Solana, you also see the warning signs for each and every level for the bears, where it means that if you get above these levels, odds really start to increase that a unorthodox low is already in place, right? So that's really what we're looking for. So that is all I have for today. The charts will be attached to this message that you will get by email. And I hope you can appreciate these insights. I wish there were better things to say for some of these cryptocurrencies, but you know, like most, we haven't cleared all of the required levels to start to say, you know what, this is looking much better for a bullish uptrend. Many of these have not even completed 5 waves up, not Matic, not Ethereum either. So we're still cautiously waiting to see if that's going to happen. And again, for example, if we see here, let's see which chart was it, the Matic chart, we're still, or in Binance chart, we're still below some of these critical resistance levels that we need to clear. When we clear those, we can start to become more bullish. So hang in there. Let's see what we get. We have our levels to watch, both for breakouts and breakdowns. Once we start trending, be it up or down, things get easier again. But like Matic here, right, we're right back where we were in early November. We've gone pretty much nowhere over many, many days, many, many weeks. Go nowhere. We're back to late October. So anybody's best guess, but the guess here, based on Elliott Wave, if we get a break higher, we get 5 up, then I'm going to look for 3 lower and another 5 higher, unless I'm again dealing with this very nasty type of flat wave that we saw for Ethereum, where we did get also, 5 waves higher of the October low, but it was a C wave. So that is still no guarantee just because we get 5 waves up, but it would really look good, much better than to get a 3-wave decline and another 5 waves higher. So that's what we're going to look for. That's what we're going to track. And I wish you all a great weekend. Take care, trade safe. And if you have any questions, just email me. All the best. Bye.